back the market share that was taken away from Apple by Android. So number two, it's the new partnership agreement with IBM. I think what Apple is attempting to do is to push more into the enterprise sector, and this is on the back of what's been happening globally. I mean, tablet manufacturers has been losing market share because tablet markets have actually matured and it's oversaturated with cheaper tablets. So I think it's a good way for Apple to go. We're likely going to be seeing further gains for Apple this year.
Well, certainly a lot of people looking forward to seeing what the iPhone 6 is going to mean for the company. Let's now take a look at Facebook. The social networks' growth in users hasn't been quite as strong as in the past, with a lot of young people turning to new technologies. How far can a surge in ad revenue sustain the company?
Well, first I think we need to take a look at the issue with younger demographics leaving Facebook. Overall, I mean, the younger demographics that's leaving Facebook, they either filter out to Twitter or Instagram. Now, we need to understand that Instagram is owned by Facebook. So technically, as a company, Facebook is not losing a lot of their audience there, and it's more of a transition to a different product. In terms of ad revenue, I think this will be very, very sustainable. We have seen an increase in Facebook share. This is on the back of better than expected ad revenue earnings. 62% of it come from mobile usage, and Facebook just launched the Facebook Audience Network program. So that's more of targeted specifically towards mobile advertising. This is not part of the earning calls that we saw last week, and we expect the revenue to keep increasing for the next 2 quarters for Facebook.
All right, now Friday's jobs data, is that going to give the central bank the impetus to hike rates earlier, do you think?
Well, I don't think we're going to get any indications of any rate hikes earlier than expected. I think the FOMC is still going to continue with their tapering, 10 billion this month, and we're not going to be looking for any rate hikes until maybe Q1 or Q2 2015. That's basically what the market is expecting. So we don't expect any major urgency or changes, even with a better than expected jobs number this week.
And taking a look at Wall Street, do you see any evidence that we're maybe at a market top and that we're perhaps due a bit of a correction in the short term?
Well, I mean, the earnings calls last week generally positive, but it was really more of a mixed bag. And the higher bond yields and also the escalating tension in Russia, Ukraine, and the Gaza Strip, I think that causes a little bit of a concern. And that's why we see a little bit of a profit taking there. Now, technically speaking, we might see a little bit of a bearish signs from the charts, and we do expect a short-term correction, not going to be major, maybe 5 to 10%, but it's not going to be major. Overall, longer-term outlook still generally very positive.
And last question for you, a bit of a holiday shortened week for some parts of the region, but what do you expect for Asian markets this week?
Well, Asian markets, I think we're going to be seeing positive momentum leading up from last week to this week. I think generally, the HSBC PMI numbers last week from China, higher copper price, I think that's really good for economies like China, Hong Kong, and even Australia. I think the only market in Asia that's going to be lagging behind a little bit is likely going to be Indonesia, especially with Prabowo challenging the election decision last week.
All right. Well, certainly likely to be a little bit volatile in Indonesia because of that. Thanks very much anyway, Vito Henjoto of Zenefix in Sydney, Australia. And that's it from me for now. Back over to Stephen and Lisa.
Thanks, Patrick. Muslims around the world are celebrating the Eid al